Hello and welcome to another engagement of the non-farm payrolls for the month of July. So June's data, we're eagerly awaiting for it to come out in the next 30 minutes. Very, very exciting this time around. You know, we've had two big misses of expectations in the last couple of rounds. So we're hoping that there's not going to be another miss. You know, we've had an estimation at the moment of 700,000 jobs to be added in the next, for the last month. So we'll see if that comes into fruition as well. Before we get into that, I just want to introduce to myself. My name is David Kindley. On behalf of Orbex, I'll be taking you through the non-farm payroll engagement to see what the possibilities are, what the results are, and also where do we go in the next month for the next engagement. So I just want to go through a quick risk disclaimer before we get into anything. So foreign exchange trading and investment in derivatives can be highly speculative and may result in losses as well as profits. Foreign exchange and derivative trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose of the purchase or any sale of commodity, security or investment, nor should it serve as the basis for any investment decision. Orbex Limited does not guarantee the accuracy or completeness of any information or analyst supply. So with that out the way, and without further ado, let's get into some analyst expectations for the last month, and what's going to hopefully come out in the next one as well. So this has actually been updated recently to 700,000, so quite buoyant in the previous, from a couple of weeks ago when we started getting a figure of just over 30 or 40,000 on the consensus side. Let's just take a look back at the previous misses that we had. So we had this big miss in April of 266,000 jobs when the expectation was nearly close to 1 million. So that was a very big miss. And then we had this other miss where it was still a big jobs number compared to April for May. However, we did miss slightly on the expectations. That's why we didn't really have a very good dollar setting in the last round. So let's just keep an eye on the data here. As I said, missed expectations by 91,000. 5.7% is expected for the unemployment rate, which would be the lowest since March last year. So, that's pretty much when the pandemic started. Same with the ADP job numbers as well, and the weekly jobless claims that we've been seeing, but we'll go through that shortly. Optimism is heightened slightly, as I said, because, we are expecting a little bit more of a progression in job numbers as well. But there's a little story I just want to catch up on. It's the Republicans that want to actually stop these weekly paychecks, let's say, of $300 for people that are out of work, because it's a bit of a strange situation at the moment. There are a lot of jobs in the market, not just in America but globally, but there are not enough people to fill those job applications because they'd rather have these let's say this salary coming in at the every week, which is $300 to keep people going. So why, on one side of the coin, why would you want to work if you didn't have to? These job benefits are stopping in September, coincidentally, but it's prompted a push by Republicans, and it's over 22 Republicans so far to reject this $300 unemployment benefits that was proposed by the Democrats during, for the COVID relief bill since last March. So, this is a very, very precarious situation that the US finds itself in, as we are still a long way off pre-pandemic levels for jobs. There are over 2 million job vacancies still going in America, and a lot of people are still waiting for these job salary cuts to happen in September for people to really start getting back to work. So very, very significant there. Also, jobless claims remain below the 500,000 bracket, which is quite significant as well. We had last year where it was remaining below the 1 million bracket, and now it's gone down to 500,000, and it actually, jobless claims actually beat market expectations as well. And also ADP figures beat expectations by 92,000, up from 600,000 last time around to 692 this time around. So very significant there as well. So if we look at the chart of the NFP numbers, as I said, we had this accelerated biggest I think, total of employed people back into work when the first wave of the pandemic finished, and then obviously we had the second wave coming at the end of 2020, which went back into a minus, into a deficit, and now we're slowly creeping up. But we had a bit of a halt in April where the job numbers really missed in that respect as well. So even if we do get these 700,000 job numbers in June, if that holds true, the nation will still be down almost 7 million jobs that it had in February 2020. So just a few figures and facts to look out for there, because it is quite astonishing where we are at currently. Even though there is a heightened expectation that jobs will return in the American market, it will take quite a bit of time, and probably after September, when, as I said, these unemployment benefits that were included in the Democrats' COVID relief bill will expire, and then we'll see if there will be any any friction between employers and employees with people getting back to work. And just looking at, as I said, just touched upon the unemployment claims. They dropped to a new pandemic low of 364,000 this week, the lowest level since, pretty much pre-pandemic. And the ADP saw fastest pace of job creation since September. So I just want to look at the unemployment benefit, the weekly unemployment benefits so far. As you can see, very big descension in these figures since the start of the pandemic. We did have a little bit of an uptick in the last round of data, but if we stay underneath the 500,000 bracket and even the 400,000 bracket, it is looking very good that less and less people are filing for unemployment claims on a weekly basis. Because this data is coming out on a weekly basis and not a monthly basis, it's more significant as well, because you get more of it's more tangible information on a weekly basis, so it makes a bit more of a telling story. Let's say we're painting more of a picture for the American economy and the jobless crisis that it has had in the last year as well. Annual inflation has gone up to 5% in May from 4.2%. It was expected that inflation is going to start creeping up slowly, with the Fed policies that are coming out and their little directions that are happening as well. This is something that we're expecting that's going to keep on happening, but how far will it go? We'll have to wait and see. And as I said before, employers have been complaining about the struggle to fill open positions, citing ongoing labour shortages due to ongoing benefits. So that's not just in America as well. The Europe, the UK, Australia, it's happening everywhere. If people have been furloughed, let's say for the furlough scheme in the UK, why rush back to work when you're getting these unemployment benefits and furlough schemes when you can just be sat at home doing other things, basically. So this is what we are looking at, and this is a slight crisis that's kind of hopefully going to be averted in the next few months as well as we get through to the summer season. So just looking at economic indicators and how they can help and what to look out for as well. So we've got ISM, manufacturing and non-manufacturing, so services as well. Service sectors and manufacturing sectors have been quite buoyant in the last few months, producing record amounts or getting back to pre-pandemic levels at least. Challenger job cuts and jobless claims, like I've just touched upon. Challenger job cuts as well, that's quite significant. ADP, non-farm employment report, private sector jobs as well is very important in the economy. And consumer confidence, University of Michigan, that's been around for over 60 years, that gives a survey of how the just basically consumer confidence, basically it goes into one basket where if consumer confidence is up, if University of Michigan sentiment is up, then usually it makes for a good reading as well. So just going into what can be done on that respect as well. Excuse me. And leading, you've got treasury yields and equities and crude oil prices. We'll touch upon them shortly. Crude oil, jumping over $74 recently, and equities, actually S&P, when I last looked, and the NASDAQ, it actually did get to record highs as well, touching record highs day after day. The Dow is kind of lagging behind in a third place. It hasn't actually really jumped that much at the moment, but if you look at the NASDAQ and S&P, the components that they're made up of, the FANG companies and NVIDIA as well, reaching the $500 million market capitalization And you've also got, Facebook that reached $1 trillion this week, amongst, Amazon and other companies that have actually over 1 trillion quite significantly, and they went up to 2 trillion as well. So this is very, very significant reading for the indices in general. You have to think that Joe Biden's first year in charge has gone quite significantly well, when there was talk that it was the Trump regime, the Trump administration, that actually catapulted the indices into record highs, record territory, month after month. Now you've got the same thing happening now under the Biden administration, so it is very, very buoyant in that respect. So we'll just see if it keeps going and how long it can keep going. Will there be a reversal in indices, especially with these big tech stocks? They do not seem to be slowing down anytime soon after even when hopefully when the pandemic does come to a halt, you'll still have these tech Silicon Valley superstars getting more and more profitable with different things that they're releasing as well. So as I said, just a quick look on the indicator list. The last round of data sees, it's a bit 50-50 at the moment, not really too much to take into account. Challenger job cuts were down. Jobless claims, like I said, were down as well, and ADP private jobs were up. But you never know, this can actually swing both ways on a monthly basis as well. University of Michigan sentiment is down slightly, but consumer confidence is up as well. Retail sales took a little bit of a hit in the previous session, so that's something to look out for. But then again, retail sales, with the opening of many stores on the high street, you have to think of the amount of stores that are actually closing down. We had the company Gap in Europe that actually is closing all its stores across the UK and Ireland. That was announced yesterday, and they will only go online now for online shopping. So you have to wonder how many more retail giants will do the same thing. It will cost less to employ people, and obviously cost less for the rent of stores to be in a physical presence as well. So is this the start of things to come for a lot of these big sale giants? We'll have to wait and see. Treasury yields are slightly down, but equities and crude oil, like I said, they have been shooting higher and higher. So we'll see if there's going to be any sign of a reversal there. Choosing the best pair to trade. This is just looking at the latest currency rates and the latest changes as well, if interest rate differentials as well on each pair, what to trade on with the big major pairs as well, and choosing the best. And sorry, continuing on that note, I just updated this 10 minutes ago. We just like to see what the strongest currencies are at the moment. Most interestingly, the big three, euro, pound and dollar, are slightly waning, but these currencies do change quite quick, probably quicker than the latest UK Health Secretary. So they do change quite quickly around. Aussie is flying at the moment, yen, Swiss franc and Canadian dollar. There isn't much Canadian dollar news this time around, as the same as the NFP. Which means that when the dollar CAD, when the loonie does start moving, it is probably going to be based solely upon the NFP figures, where usually we do get some employment figures coming out of Canada at the same time on certain weeks. So we'll see what happens in that respect as well, as we come up to just 15 minutes before the news release. So like I always do, just want to go through a few points in this respect, just to see how you can avoid losing, making potential losses, and also how you can also make the best gains as well, and what to look out for. So number one, avoid trading during the NFP, as volatility is high and whipsaw effect could lead to losses that exceed profits. So this is just basic 101. If you don't want to be involved in high impact fundamental news events, then the NFP is probably one of the ones that you want to avoid completely. The NFP comes around every Friday, the first Friday of the month, unless there's a bank holiday, like if the 4th of July fell on today, then it would probably be carried over to the next week. So on certain events like that, because we've got the 4th of July weekend on Sunday, it has actually missed. But with that being said, always just completely avoid any big fundamental news events. Make sure you look out for what you want to trade on. If it's a quiet time, always look on the economic calendars. On Orbex.com, we have a updated ongoing economic calendar on a daily basis to make sure that you are not missing anything out as well. Number 2, apply protective stop loss and take profit risk management measures in order to bypass emotional hurdles. So we've all been there and done it. We've probably had a running loss which has exceeded our expectations and probably gone into our risk capital as well. We don't want to lose more than what we can afford. So, putting in a valid stop loss to make sure you're only probably losing 10% or maybe maximum 15% of your capital, of your equity, to make sure you're not going into these emotional turmoil and then maybe hoping the market swings back in favor. It doesn't swing back in favor, and then you lose more than what you wanted to on that particular trade or on a group of trades, depending on what it is. And on the flip side of that coin, you've got take profits as well. If you're happy to realize a profit at a certain time, then it's better to just close the trade and move on to something else. Whereas if you see a profit running more than what you want it to or more than what you expected it to, maybe it's better not to take the risk and close out any potential profits rather than the market reversing and then obviously falling back into a negative. So something to think about when the market is really moving and you do have losses and profits as well. Number 3, close out all positions, if any, ahead of the release in attempt to divert from high volatility and range risks. So this basically brings us back to point 1 in a way. We want to close out all positions ahead of any big impact releases such as the NFP, and you won't hit that high volatility switch and range risks as well. But I'll go into this a little bit more on the chart to explain what potential gaps can happen at the release of any high impact news event as well. Excuse me. Hedge your positions, if any, ahead of the release in case your risk is minimum, because if you trade long term and the stop loss is being far away from being hit. So hedging is a good strategy if you can get it right. Obviously buying and selling in the same amount, but it depends at the same time, with the same currency, but it depends if you want to use the same currency to hedge. Like if you can hedge with selling the dollar, let's say. So if you're buying euro dollar and pound dollar, then you're selling the dollar because the dollar is the quote currency. So you don't have to always hedge with the same currency. You can hedge with different currencies as well, bearing in mind that the quote currency is the same. So that could be a good strategy as well, but make sure that you are doing it correctly. And if it goes too far on one side, it is sometimes better to close out on that position, because losses can really exceed your target, like it says here, especially if it's being far away from being hit anyway. So just something to think about. And hedging, as I say, it can be a good strategy as well. Number 5, if you are eager to trade despite the warnings, do let the market calm down before entering a trade. That way you circumvent the heated environment and also have a clearer picture as to where the markets could be heading towards as market noise is reduced. So this just goes back to the fact that, number 3, where if you wait for the volatility and the market noise to calm down, then you can, have a better feeling of the market and understanding. When the news hits at a certain minute, we could probably get over 100 ticks in a few seconds, depending on how big the volatility is and how much we are looking at moving in the market. So, this is a very good, let's say, tip about letting the markets calm down, because market noise can actually last up to probably an hour after the fundamental news event has happened. So when the NFP happens in roughly 10 minutes, you could still be getting ripple effects of the news, 30, 40, 50 minutes afterwards. So something to look at when we are waiting for the NFP to calm down or any news event. Number 6, analyze the post-data release. Without supporting employment, wage, unemployment data, any directional trade is at risk of a reversal despite the NFP being over, as post-effectual bias depends on all 3. So basically this just comes down to a little bit like number 5, analyze the data post-release so that you're not having any surprises. You're looking at employment, wages, unemployment data. So like I said before, sometimes you've got with the loonie, with Canadian dollar, you've got news at the same time, such as balance of trade, unemployment data in Canada, you've got unemployment data in America, and you've also got things like average hourly earnings and obviously the NFP numbers in themselves. So all these 3 or 4 different factors can keep the market noise going, and the post data release can be actually quite generous if you analyze it correctly. So something just to look out for. And finally, pay attention to divergence between actual and consensus figures. Gaps of 20 to 30k are not considered very effective either. So this all comes down to, if there is an expectation of 200,000 jobs to be added, and we only get 20,000, then this isn't really, this will be a big figure if we're expecting something higher. But if the differential is only 20,000 jobs added to the expectations, then we probably won't see much volatility. It will probably be quite expected, and obviously we won't probably get a big gap in the market, and also that 50, 60 or 80, 100 pip range for the euro dollar, pound dollar, etc. We probably only get maybe 20, 30 pips. It will most probably be a non-performing NFP if we do see like a 20 to 30k job added, if it is expected. A few sessions ago, like I said at the beginning of the presentation, in April, when we had the 226,000 jobs added when it was supposed to be almost a million, this is a very big gap. So we did see a lot of volatility on the dollar pairs especially, and even gold did actually start fluctuating quite a lot. So this is something to look out for as well if we are looking at being very, very buoyant in the gap. But 700,000 jobs at the moment is expected. So basically, if we get, let's say, 200,000 jobs again, there probably will be a lot of volatility and maybe big gaps in the market upon the release. However, if we get 680,000, 90,000, which is a close figure to 700,000, then we probably won't see too much of a divergence and big gaps in the market. So with that being said, just want to take you through a basket of currencies that I just want to have a look at, like I usually do. I've put the indices on this time as well because they're flying high and doing so well. So the 3 major indices in America, the S&P, the Dow and the Nasdaq. So euro dollar, first of all, just want to have a quick look at that. So the dollar's been very, very strong in the last few trading sessions, and as you can see, I put it on the 4-hour chart. It did break my previous targets here, and then we had this really vast amount of downside, and that was nearly 250 pips, so quite significant. We've broken the 120 handle, 119. Now we're looking for the 118. This is something that I've highlighted recently, as I just want to see if we do get a good jobs number, then I believe the 1800 handle, the 1800 handle will probably be eclipsed in the near term, that's for sure, and we'll probably start pushing for further lows to the downside. So the last time we saw these levels, I just want to point that out. So this was going back probably to about April time. Yes, the beginning of April, and before that, just at the end of March, beginning of April, we saw this decline below, actually towards the 117 handle, which is quite significant. So we've had this kind of choppy action here. Will we see another dip to this particular line here? It'll be interesting to see upon the release of the news, and then probably another push back up. So this is what I'll be looking for in the short term at least. Cable as well. As obviously, with the dollar being quite strong in the last few trading sessions, again, we've seen a bit of a come down in prices. It's broken most of my other limits, and I was looking at a bit of support at the 137.90 region. Again, that's broken, and now we're in the mid 137. My next target, again, like the euro dollar, is the 137 round for the next significant handle. Gold, I've been very, very impressed with gold. We are looking at the upside. Currently, it's actually tanking, but in the whole picture, we are looking for a resurgence back into the 1,800 territories. That's the next level that I'll be looking at as well. We have actually from a a couple of sessions ago, 29th of June, gold has risen by almost $40, so quite significant there as well in the near term. So again, I'm looking at either to keep pushing up to the 1800, or we could see a little bit of a come down. I look at the indices shortly. I just want to go through the safe haven yen. And again, a little bit of a choppy action here. I'm not really going to bother putting a Fibonacci or anything like that in because it's very, very choppy at the moment. Obviously, the natural support levels that I'll be looking at here is the last time we actually found some support at the 111.35 region. But, depending on the job numbers, we'll see how that happens. And also, finally, for the currencies, the loonie. Got this on a 1 hour chart actually. Let's put it to a 30-minute just to get a bit of perspective. So again, as you can see, we've hit a bit of a top and now we are moving lower. So 124.43 is where roughly we got to. Now we're coming down a little bit, so we can see if we're going to have a bit of a retracement there, and can probably put just a small fibbo there to see what the, so we've done the 38, done the 50, probably looking for the 68, 61.8 at the moment, but we're in between the 23 now, so we'll see if that comes into fruition as well. Moving on, if it's going to retrace, that is, we'll see shortly. So just a quick look on the indices. So like I said on the presentation, the Dow is probably the one that is the only one that's really struggling a little bit to hit these record highs again. As you can see, we had a record high roughly, we had this double spike, probably a false break, double false break, just over 38,800. Just bring it down to a nice round number there, 38,800 if I can get it in. That's close enough. And now we are looking to the upside, especially for the big tech stocks that make up the Dow. So, sorry, the stocks that make up the Dow anyway. So we're just looking to see if that's going to happen. So 34,625 at the moment, and we'll wait to see what's going to happen with that. But if we look at the NASDAQ at the moment and the S&P, I'll just bring these two out together. Whoops. So let's just get those out again. It's the S&P and NASDAQ. So NASDAQ here, and the S&P here. Bit temperamental with my MT4 terminal at the moment. So as you can see, I'll just bring this out to a daily chart, looking very, very nice for an ascension to the upside. It doesn't look like it's slowing down at the moment. However, we could see as we enter the second quarter of 2021 if we'll see it slide down. But we had this quite big descension, and this was at the beginning of the year. We've broken that particular level, especially for the NASDAQ. Bit of a false break, slide down again, and now we're heading to recent highs. So that was quite an important factor here, that we reached above the 14,000 barrier to really break to fresh highs. So that is very, very significant. So just getting ever closer now to the jobs report. Just wanted to go through a few things, as I said, to see where we are and what's happening as well. So just a couple of minutes to go before we start looking at what's in store for everything. Just bringing up my economic calendar. So like I said, we've got the balance of trade for the loonie today, but no other unemployment benefits or anything. There's a marketing PMI later as well, which could actually start shaking up things, but we'll wait and see if that comes into fruition as well. And we'll see if we'll get that going. So let's just wait a couple more minutes as we probably start seeing the markets move slowly or quickly. We'll wait and see. So yeah, I mean, for, like I said, euro, dollar and cable, just looking to see if we're going to start piercing these significant handles of the 118 and the 137 as well, which will be very, very significant in the near term at least. So here we go. So 850,000 jobs added to 850,000 jobs added is the early indication here. I'm just waiting for clarification. So we've got quite a big jump in prices here. Let's just expand cable and the dollar, and the euro dollar, sorry. And unemployment rate has remained at 5.9. It was forecasted to be 5.7, so not too much in the way of surprises there, even though we have got a little bit of a deficit. So we are on course. 700,000 was the consensus, and we've got 850,000 job added, so that's quite significant. Another extra 150,000 jobs added for the month of June. Now let's see where prices can take us. So we've had a little bit of a spike. I expect that to come down a little bit more as the session progresses. And I've just realized I've still got it on a daily chart, which doesn't really help. And this is the 4-hour chart. So let's see what's going on with that. Let's pull these out a little bit more. So not too much in the way of activity at the moment. We have spiked only 13 pips. So it could be the fact that this was priced in. There was expectations that there was going to be quite a big jobs number in store. And we'll see if that's going to affect the indices as well. So S&P on a flyer, and so is the Nasdaq. So that has been very, very good news for the indices at least. And we'll just bring the Dow. Oh wow, look at the Dow. So very, very positive for the indices. I'm expecting a bit more movement on euro dollar and cable at least. But as you can see, the indices are pretty flying at the moment. Just waiting just to confirm some more news for the balance of trade as well. Is roughly about the same, not really too much in the way of actual to consensus. Consensus was minus 71.4 billion, and the actual was minus 71.2 billion. So nothing too much in the way there. It's just the non-farm payrolls we can sink our teeth into, so to speak, with that kind of data. So dollar yen looks like a bit of quite a big spike actually. Let's just see how much that's moved. 20 pips. So even though we're getting quite a big candlestick on the euro dollar, it's only in the region of 30 pips. So we didn't really get that much of a move like we did a couple of sessions ago when we had that really, really big miss. So this is what I mean about market noise now. Even though a few minutes ago, like a minute ago, we did have a bit of a spike to the downside. We're seeing this market noise now where traders and investors are looking to see where the next direction of prices will go. And we're going to see if that's going to help any of the trades. As you can see here, the loonie, it's moving down through our Fibbo. We've hit the 61.8. I'll be looking to see if we can get these recent supports roughly about the 123.60 or lower region, 123.64, 123.66, around this kind of area here. As I said, this is solely based pretty much on the NFP figures, as we don't really have much Canadian news at the moment. Dow, Nasdaq, and S&P. What can you say about them? All flying higher, and exceeding record highs as well. And we'll see if that can maintain the momentum throughout this American session as we go into the evening session of the European zone as well. So will we see a bit of a retracement now on the euro dollar? From what I can see here, we're looking at this for a bit of resistance now, this level here where it's actually spiked, because we've hit a bit of a double top here at the 118.47. So if it does go over there, then we'll be looking at previous highs above that at the 118.78, but that'll be via 118.50 probably, because we've got another 40 pips to go up until that region. So as you can see, it is still flying higher, and doesn't look like much of a strong dollar at the moment, with cable moving in the same direction and dollar yen going the other way as well, and dollar Canadian as well. So let's just keep an eye on gold, check in with that. So we've got gold on a 4 hour. Let's put it on the 30 minute. Actually, let's go down to 15 minutes. That'll be quite good to see. So we've had quite a big fluctuation on gold. Let's see. Okay, $15. And as I said, I'll be looking for this 1800 region for it to break and probably propel above. Let's go back to the 4 hour chart just to get a bit more of a better perspective. So, you know, as you can see, these nice resistance levels here at the 1794 area, 1795, give or take a couple of dollars. If this is broken, I fully expect 1800 to be tested again before the session is out, and then we can see if we can get back to recent highs. But this big progressive drop, and this was only you know, less than a month ago, of over $130, almost $140, quite significant to see if we can get back up to where it was before. So as we're digesting the news, I just wanted to tell you that this video will be posted on our YouTube channel. So for any comments or queries or any suggestions that you'd like to put our way, please feel free to add them to the post. So what I want to just double check and take you through is, if we go to the minute chart at the moment, during the presentation I said about gaps in the market, making sure that you do not trade NFPs if you are not aware of volatility, of slippage, of gaps in the market. So if we just take a look at what we're looking at here. So here, for example, I'm sure that when the news was released, there was probably some gaps in the market. And what do I mean by that? Well, if you put in a take profit on the sell side, let's say at this, let's say let's do a nice round number, 118.18. If there was no price at 118 and the next available price was probably 118, another nice round number, 118.10. So there'll be no price here. So your pending order, unfortunately, will not be filled at that price, because if there's no price in the market at the time, then how can it be filled? So basically you set a pending order here and then your price is here. So your entry price will be at 118.10, which will be at the next available price in the market, regardless of what the pending order price is. This is just a factor of slippage when there are high impact fundamental news events happening, and at the same time we get to see what the opportunities are. So don't be too deflated, let's say, if your price isn't picked up at the price at your pending order price, because you know it can be a case of, if it wasn't in the market, then how can it be actually filled at that price? So that's what we mean by slippage and gap. So if there is a gap in the market, you know, it won't be filled. So even if you've got a full body candle like this one, it doesn't mean that every price in that candle has been filled and achieved. And what do I mean by that? Well, if you've got a price here and the top of the candle is here, the prices in between may not have been hit. So it might just be a factor that the candle has been made, but all the prices in the candle have not actually been completed. So if we take this example of the euro dollar candle here for, I think it's the second minute after the NFP, so 332. So this is GMT +3 at the moment. So again, the price hits here. You've got a pending order in the middle here, but it's the first available price is 118.38. It doesn't mean that every single tick and price has been completed in this candle. It just means that the price has gone from here to here, and then maybe it's come down a little bit to probably make up the body of the candle. It doesn't necessarily mean that all the candle has actually been hit. So it's very, very important to understand that as well. As we see now, euro dollar is coming down slightly, so we are getting a little bit of a reversal, but we'll just see how much of that reversal is gonna complete in the next few trading minutes as we complete the first 10 minutes post NFP. And as you can see, the markets are calming down slightly. The indices are still very, very buoyant at the moment. So that's very good. Very good viewing if you are bid on the US indices. And it's an easy direction to go to. I think a lot of it was quite a predictable market in the sense of the indices that they will probably keep pushing higher in that respect as well. So we'll wait and see what the repercussions are going into, as I say, completing the first 10 minutes. The Loonie has pretty much retraced back to the 61.8. We'll see if it can go back to the 50 and then obviously start touching the 23.6, which is where we got a little bit of resistance and which pushed prices to the downside as well. So dollar yen, as you can see, very, very undecided candle there. Very indecisive in that respect. Let's bring it down to a 15-minute just to see the internal structure. So the last, 5 minutes even. So the first couple of minutes of the NFP release were probably the most significant for the dollar yen, as you can see. So there's a very good example of a gap in the market. So as you can see here, if you had a pending order at this price, the 111.46, obviously as you can see, the price was not in the market at the time. There was a gap and it was probably filled at the first available time in the market. So if we just go over this gap at the moment, so as you can see, the open was 11.46 and the close was 11.53. So with that being said, 11.46.5, as you can see, it's 11.46.1, so 11.46.5 is literally at the bottom of that candle. So there was a gap here and the first available price was actually the bottom of that candle. So this is just goes to show that with the tips in the non-farm payroll presentation that I took you through, just to avoid any fundamental news events, if you want to avoid those emotional hurdles as well, and getting your trade in and out as quickly as possible, so you're not losing any more risk capital or equity than you really want to. So as you can see, Dow, Nasdaq and S&P still flying, and we'll see what the repercussions are. The Dow, as you can see here, I'm fully expecting to probably test these recent highs here again, roughly 34,800 in the near term, possibly before the American session closes later on. As you can see now, it's just open with the NFP figures. And let's just see if we can find a bit more data to sink our teeth into. So it's the strongest job growth in 10 months for the NFP and well above the market forecast of 700,000. Leisure and hospitality are obviously the main talking points, and with the ADP job figures as well. Forgot to touch on that. Obviously leisure and travel, with less restrictions happening around not only the world but in America as well. You know, obviously leisure and tourism, travel are the job sectors that are really getting back on track at the moment. So very, very good and positive news for those sectors at least. So again, just take you through the last couple of minutes of the presentation. So as I said before, we'll upload this on our Telegram channel and also our YouTube channel to make sure that you know, if you want to engage with us, you can, about any factors going on around not only the NFP, but you know, jobs numbers in general, unemployment data. Where do you think the next 6 months, the second quarter of 2021 are going to go? You know, we've had this potential third wave of the Delta Indian variant coming up to America at the moment, and you know, like Joe Biden said about Donald Trump, no president in the world could have stopped the virus hitting America, but what has been done since then is more important. You know, was it too much of a delay by Donald Trump? Did he do the right thing by stopping people from China entering America? You know, and what will Joe Biden do in the next 6 months if he is put on this huge pressure if there is a third wave? And as I said, these unemployment benefits are stopping in September for all Americans. The Republicans are really starting to push that advice as well. So what will happen to America for the second half of 2021? Or are you just looking at the third quarter of 2021 to get you through, not looking too far ahead to the end of the year? Because who knows what 2022 is going to bring to a lot of people as well. So just getting back on track here, let's go back to a 30-minute range. So as you can see here, a little bit of an undecided candle as well. A bit like the dollar yen, we're not really seeing too much surprising moves. You know, as I said, we've hit this, we're going on this bit of resistance now, the 118.47, 118.50 range. I'll be surprised if we do start picking up to these kind of levels by the end of the session. That's another 30 pips, 20-30 pips. It seems a little bit long way away for me anyway. And but cable's looking quite progressive as well at the moment. It just depends if we're going to see any more fluctuations. But to be honest, a little bit of a calm NFP. You know, cable 55 pips. We've got euro dollar. If we see the body of the candle, you know, 23 pips. Not too much in the way, excuse me, of big surprises there at least. And dollar yen as well, probably about 20. That body will probably be about 15-20 pips. It has spiked upwards, but you know, we're not really going too far in that respect as well. So just to cap off in closing with the NFP presentation for this time around, keep an eye on the 3 main indices, not only today, but for next week as well. There was a report in the stock watch that I did a few days ago that the big tech firms have no signs of slowing down. Excuse me. And, you know, as we enter the third quarter of 2021, these the FANG companies, especially Facebook, Amazon, Alphabet, the Google parent, the parent of Google, sorry, and the other companies, they look to be bolstering, you know, stratospheric profits, especially hitting the $1 trillion market capitalization and actually staying in there as well. So we'll just wait and see what the potentials are. So that's all from the NFP engagement for this time around. Thank you very much for joining me. If you have any comments or queries, like I said, please add them to the video that I will upload, and I'll get back to you as soon as possible. Keep an eye out for the market noise. As I said, even though we seem to be simmering down on a few of the major pairs at the moment, as you can see, the euro dollar and the pound dollar is kind of quietly settling down. It doesn't mean to say that we won't see a vast ascension in the next few hours, because obviously the American session has just got underway, and we want to see what the repercussions are for the rest of the American session after this jobs report. Usually a lot of traders and investors do start their weekends early after the NFP, because it's pretty much one of the biggest fundamental news releases of the month. So once this has been done, we usually calm down, and there probably will be a quiet American session, but you never can tell. If something does come out in the headlines, then be sure to keep an eye out for it as well. So that's pretty much another little tip. So that's all for now. Thank you very much for joining me, like I said before, and we'll meet again for the next engagement in a month's time. So bye for now. If you're having a nice 4th of July weekend, please enjoy. And if you're having any kind of other weekend, please enjoy that as well. So bye for now, and I'll catch you next time.